Now speaking, Nikolai Belyaev, Vice President, Investor Relations. Elastic reported its fourth quarter and fiscal 2023 financial results on a conference call with CEO Ash Kulkarni and CFO/COO Janesh Mirjani. The results included forward-looking statements about Elastic's products and solutions, revenues, and other information, subject to risks and uncertainties that could cause actual results to differ from the projections. The company also discussed certain non-GAAP financial measures, which were reconciled with the most comparable GAAP measures in their press release and slides. On June 6 and 7, Elastic will participate in the Bank of America Global Technology Conference and Rosenblatt Technology Summit. Now speaking, Ash Kulkarni, Chief Executive Officer. Elastic reported strong financial performance in Q4 and for the full fiscal year. Total revenue grew 19% year-over-year in constant currency, with Elastic Cloud growing 30% year-over-year in constant currency and representing 40% of total revenue. Elastic Cloud saw solid customer contractual commitments, with customers continuing to consolidate onto their platform and making large multi-year commitments to optimize costs. Non-GAAP operating margin was 8.6%, higher than expected, and they are on track to deliver a 10% margin in FY24. Elastic is leveraging their competitive strengths in search, log analytics, and security analytics to drive their land and expand strategy. Elastic has invested in AI and ML capabilities for years and have many existing customers and use cases that demonstrate their successes. Their newer capabilities, including the Elasticsearch Relevance Engine, or ESRE, and vector search have enabled them to be a key component of the emerging AI stack and democratize generative AI. They also have relationships with major cloud partners, such as AWS and Google Cloud, and have been successful in closing deals through their marketplaces. Elastic also recently announced the beta of a new Service Level Objective or SLO monitoring capabilities in Elastic Observability to measure and monitor service quality. Now speaking, Janesh Mirjani, Chief Financial Officer. Elastic delivered solid results in the fourth quarter, with total revenue of $280 million, up 17% year-over-year or 19% in constant currency. Subscription revenue was $256 million, up 16% year-over-year or 18% in constant currency and comprising 91% of total revenue. Elastic Cloud revenue was $112 million, growing 28% year-over-year or 30% in constant currency and representing 40% of total revenue, up from 37% a year ago. Professional services revenue was $24 million, growing 35% year-over-year or 38% in constant currency. Customers are choosing Elastic for three reasons: platform innovation to drive multiple use cases with any kind of data on a single stack, lower total cost of ownership, and flexibility of consumption model. There was a healthy balance across the solutions and over 4,100 customers above $10,000 in ACV at the end of the quarter. Additionally, there were over 1,160 customers over $100,000 in ACV and over 140 customers over $1 million ACV at the end of the year. Net expansion rate was 117%, reflecting only actual consumption on consumption arrangements. On profitability, non-GAAP gross margin was 76.3% and operating margin was 8.6%. Diluted earnings per share was 22 cents and free cash flow margin on an adjusted basis was 9%, or approximately $26 million in the quarter. For fiscal 24, total revenue is expected to be between $1.238 billion and $1.250 billion, representing 16% year-over-year growth at the midpoint in both as reported and constant currency terms. Non-GAAP operating margin is expected to be between 9.7% and 10.3% and non-GAAP earnings per share is expected to be between 94 cents and $1.06. For the first quarter of fiscal 24, total revenue is expected to be between $283 million and $286 million, representing 14% year-over-year growth at the midpoint in both as reported and constant currency terms. Non-GAAP operating margin is expected to be between 5.6% and 6% and non-GAAP earnings per share is expected to be between 10 cents and 12 cents. Free cash flow margin on an adjusted basis is expected to be slightly above the non-GAAP operating margin for fiscal 24. Overall, Elastic is focused on delivering profitable growth as they build a multi-billion-dollar revenue business, confident that they are still in the early stages of this journey. RBC Capital Markets analyst Matt Hedberg inquired, "What has been the early interest in vector search and AI on the Elastic platform?" Ash Kulkarni replied, "In response to the question about generative AI, I can say that since announcing our Elasticsearch Relevance Engine, we've been having daily conversations with customers who are excited to use vector search. Generative AI requires two components, a large language model and private data that provides context to the model. We offer both on one platform, so customers don't need anything new. We're seeing great momentum and believe our position is strong for long-term success in this space." Customers are working through data privacy, security and model bias considerations, which should expand the total addressable market. RBC Capital Markets analyst Matt Hedberg inquired, "Do you think Elastic Cloud growth could rebound sooner than expected, despite macroeconomic pressures?" Ash Kulkarni replied, "When it comes to monetizing our AI-driven vector search and machine learning capabilities, we have premium editions that drive consumption. As customers move from individual consumers using ChatGPT for fun use cases, businesses are exploring what applications they can build with generative AI. We are focused on execution now, but in the long run, I'm confident this will be significant." Citi analyst Tyler Radke inquired, "Ash, are you seeing any of the new AI companies using the Elastic platform in newly released products? Can you speak to the composition of these customers' use cases?" Ash Kulkarni replied, "The customer examples I mentioned demonstrate that our vector search functionality is applicable to a variety of businesses. From the home improvement store using us for product search, to Relativity using us for search use cases, they show the potential of our platform. We're also seeing interest in observability and security. Customers are looking to take remedial action on security threats without needing sophisticated threat hunters, or get prescriptive steps when dealing with an issue in their Kubernetes cluster. We have a lot of experience with machine learning and we're taking it to the next level." Citi analyst Tyler Radke inquired, "Janesh, did macro headwinds impact cloud revenue in the quarter? What assumptions are you making to reach the implied acceleration in FY 24? Are you targeting a certain percentage of cloud revenue by year-end?" Janesh Murjani replied, "Overall, our Q4 performance was pleasing. We expected the same trends we saw in Q3 to continue and that's exactly what happened. Our customers are engaging with us and looking for ways to optimize their consumption while also saving costs. Our contracts typically have one-year terms, or longer terms with annual breakpoints, which helps ensure revenue is recognized in fiscal 24. We have also increased our capacity with additional enterprise and commercial sales reps. Looking ahead, we feel confident going into the year with a strong base of commitments and the capacity to meet them." Bank of America Merrill Lynch analyst Koji Ikeda inquired, "Question, is vector search a paid feature only, and how does Elastic's vector search differentiate from other vendors?" Ash Kulkarni replied, "Great question. Koji, the features available in our premium versions include vector searching, machine learning for data ingestion, ELSER model capabilities, and hybrid search technology. By using our platform, companies don't need to share their private data with language models as it can all be handled in real time on our platform. Vector searching, textual searching, filtering, aggregation, and the ability to add external models from Hugging Face or PyTorch sets us apart in the generative AI space. Our solution is multifaceted and complete, and enables us to stand out in this market." Bank of America Merrill Lynch analyst Koji Ikeda inquired, "Janesh, does the fiscal 2024 guide assume that the 40% of revenue mix from the fourth quarter will stay flat, increase, or decrease throughout the year?" Janesh Murjani replied, "Koji, great question. Our cloud business is growing significantly faster than the overall rate of our company's growth, driven by product investments and go-to-market focus. We don't have exact numbers yet, but we anticipate a mix shift in favor of cloud throughout the year." JP Morgan Chase & Company analyst Pinjalim Bora inquired, "Can someone familiar with Elasticsearch easily transition to ESRA, and will this give your company an advantage in the generative AI space?" Ash Kulkarni replied, "Pinjalim, thank you for the question. Elasticsearch is the de facto platform when it comes to enterprise search, and our ESRA relevance engine allows us to utilize vector and BM25 textual search capabilities in a single platform with consistent APIs. This means that customers familiar with Elasticsearch can get up and running quickly without needing to learn new APIs or manage a new system. Conversations with customers are reflecting this excitement, and we are excited to see how businesses put ESRA into production going forward." JP Morgan Chase & Company analyst Pinjalim Bora inquired, "Janesh, what gives you confidence that subscription growth in the second half of this year will reach the 16% guide? What consumption trends have you seen so far in Q1? Janesh Murjani replied, "Pinjalim, based on our contractual commitments in Q3 and Q4, we've seen strong customer activity. This has enabled us to add significant short-term deferred revenue that gives us confidence for the full year. Additionally, the sales capacity we have in place will start to hit their thresholds and contribute to our revenue in fiscal 24. May's top-of-funnel activities have been typical so far, and we're feeling good about the outlook for the year." JP Morgan Chase & Company analyst Pinjalim Bora inquired, "What are the expected financial benefits of the new AWS collaboration for Elastic, and how will integrated go-to-market activities differ from prior engagements?" Janesh Murjani replied, "The partnership with AWS is comprehensive and builds on our existing relationship. We are committing to greater investments in areas such as co-marketing, cloud adoption, integrated go-to-market activities, technology integrations, commercial incentives, global practices, and additional work for competency designations. This will result in reference architectures, better integrations, and other benefits that will be realized over time. We are proud of the progress we have made and look forward to providing further updates. Robert W. Baird & Company analyst Shrenik Kothari inquired, how do you see the dynamic between customers optimizing their consumption in your product innovations such as the relevance engine, vector search transfer models and ESQL? What go-to-market strategies are you pursuing to drive more value into existing packages? Ash Kulkarni replied, customers are being very cost-conscious and looking to optimize their current workloads on Elastic. We often hear from customers that our frozen tier, which stores data in low-cost object storage, is faster than the hot tier of our largest competitor. This offers great value at a much lower cost, allowing customers to make larger commitments to Elastic and migrate workloads off other platforms. We're seeing amazing total cost of ownership, like 3x the value for a county in California. These anecdotes translate into revenue, setting us up for continued growth. Rosenblatt Securities analyst Blair Abernethy inquired, question, how are you leveraging the relevance engine to maximize customer value? Are there plans to build similar solutions around observability and security? Ash Kulkarni replied, our go-to-market strategy combines bottom-up and top-down motions. We're engaging developers through blogging, events and meetups. We're also working with our large customers to brainstorm on new ways to use our technology. All of this is built on top of the strong Elasticsearch brand. Barclays analyst Raimo Lenschow inquired, can you provide an update on the optimization journeys your customers are taking with Elastic? Are they continuing to be cost-effective or have they begun spending more with you? Ash Kulkarni replied, Raimo, customers are optimizing their existing workloads by shifting more of their data to our frozen tier. This provides them with a huge advantage as our frozen tier is faster than the hot tier of some of our competitors. However, there are natural limits to what can be moved to the frozen tier and data volumes continue to grow. Our platform is seeing newer workloads come on board, so we anticipate an offset in the coming year and beyond. We're leveraging this to take market share, so when people start spending again, we'll be well positioned for the future. Jefferies analyst Brent Thill inquired, Janesh, what changes are you making to the go-to-market strategy for this upcoming fiscal year compared to last year? Janesh Murjani replied, Brent, our go-to-market model is working well and will remain largely the same. We've had success in commercial/enterprise sales and cloud commitment. We're increasing focus on consumption too, including adding a small piece to the sales compensation plan. Our partnerships with hyperscalers and marketplaces are strong, for example, the recent AWS announcement, so we're confident in executing this year. Jefferies analyst Brent Thill inquired, when do you expect the AI solutions to be monetized? Is it in the first or second half of the fiscal year? Ash Kulkarni replied, our ESRA announcement was the key to unlocking our platform for customers to build their own generative AI applications. We are continuing to develop copilots for observability and security, but the core platform is available now. As customers move from trial to production, we expect the pendulum to swing in a major way. We feel confident that we will be a winner in this space in the long term. Jefferies analyst Brent Thill inquired, Janesh, can you tell us about revenue growth from customers with over 100K in the customer base? What is the NRR relative to the rest of the base and what is the revenue mix for these customers compared to recent years? Janesh Murjani replied, our larger customers are increasingly focused on consolidation to take advantage of our platform and consumption model. Our land and expand strategy has been successful in this area, with many customers starting off at less than $100,000 then growing into the 100K plus category. In addition, our sales team closed a number of meaningful deals in the quarter, indicating expansion and progress in the enterprise and commercial side. We expect this trend to continue going forward. Ash Kulkarni replied, thank you all for joining us. We are confident in our ability to drive growth and profitability, and are excited about our unique position in generative AI. We will keep you updated on our progress. Have a great evening.